Rick Rieder of BlackRock writing, the immense disruption of trade and global supply conditions will be what truly influences market pricing. Rick joins us now for more. Rick, welcome to the programme, buddy. Always a privilege, a pleasure to catch up with you, sir. This move that we've seen in this equity market, we've thrown so much at the stock market over the last several months. AI disruption, private market jitters, and now the Strait of Hormuz remaining closed for almost 2 months now, Rick. And here we are at all-time highs. Does that bring you comfort or make you nervous?
Good question. I'd say a couple things. First of all, I think what it tells you is the technicals in the equity market are extraordinary, and the earnings numbers that are coming through are pretty powerful. And so, you look at the U.S. economy and you look at what's, I heard at the beginning of the show talking about the economy's weak, economy's is strong. Actually, the parts of the economy and the primary drivers are doing quite well. You look at tech. You look at some of the numbers yesterday that you cited. And you look at these earnings growth. I was looking at some of the semis. You're talking about 97% earnings growth year on year. Like unbelievably powerful numbers. And then you look at, the high-end consumer, that consumption. You look at retail sales when you break it down. Pretty darn good. So you've got an economy. And by the way, you've got, housing's not in good shape. Lower income's not in good shape. So that is what it is. But what drives the equity market is in pretty good shape. And the technicals. So you had this period of time that nobody wanted to buy stocks. And then you realize, I've said it before, you're going to have an IPO calendar this year that maybe is a couple $100 billion, maybe. We're going to buy back $1 trillion of stock this year. So we're actually, there's not enough stock to buy. So it's just a pretty, talk about how explosive this is. You realize people sit on their hands, I don't want to do anything, particularly in tech. And then all of a sudden, maybe a little bit of better news, the earnings come in, and then you create this. The technicals and equities, by the way, it's completely different when you think about the treasury market, et cetera, because we're getting, what do we get, 520 billion a week of supply. It's, it's amazing in the equity market how good the technicals are.
Rick, is there a contradiction in the fact that we're seeing such explosive confidence in equities? You're seeing so much cash out there that are looking for places to go. And at the same time, people are expecting inflation to come back down to 2% over the next 5 to 10 years. Does that seem contradictory?
No, listen, I think I've been doing this for many, few decades. I've never seen a productivity revolution like this before. So you go through, almost every company I look at, you see a similar dynamic. I can grow my top line revenue, let's say it's 4 to 10%. Obviously, tech, it's significantly more significant than that. But then if I keep my labor static to down, and then if I can get my cost of goods sold, and you see this in M&A, if I can create synergies, I can run a higher operating margin. If you can run a higher operating margin, then my ROE is significantly higher. And so then it just keeps driving this dynamic. So you think about and by the way, we haven't really seen automation, AI really kick in yet. So I think, there's this transmission. Part of why I think big cap stocks are so powerful is you're building a moat because you utilize data so effectively. We're seeing productivity take place. It buoys earnings. Companies do great. By the way, the counter of that, it's not great from an employee point of view. You're seeing that play out, which is part of what what affects the interest rate transmission. So it's a really good story from a productivity and a corporate earnings point of view, not so much for the broad population.